Hey everybody, Rob Maurer here, and today we're going to be talking a little bit about Tesla stock. We had another new all-time high close today. We also have an updated note from Wedbush Securities. They've raised their price targets on Tesla. Some news on Model Y, Model X, and then GM and Ford as well. Alright, so another strong day for Tesla today, finishing up 6.6% to $521.85. That compared to the NASDAQ up 0.2%. This is the first time since the split that Tesla has closed above $500 per share. Or if we were still pre-split, it would have been the first close above $2,500. And while we didn't quite hit an all-time high today, again, that still stands at about $538 from the pre-market trading on September 1st. Today's high was only $526. This was still an all-time high close, eclipsing the previous all-time high close from last Thursday at just below $500. Vincent on Twitter tweeted about this being the first close above $500, and Elon replied to that tweet simply saying, "Wow." Tesla's market cap right now sits around $494 billion, so just shy of $500 billion. If Tesla can hit roughly $527.50 per share, that'll put them at that $500 billion valuation. If we take a quick look at the volume for today, it was, again, not all that high, about 48 million shares trading hands versus the last 12 months. The average is just over 65 million shares per day, so about 73% of average, though a decent amount higher than the 1 month average at around 34 million shares. One thing I did add to the sheet here, if you're watching the video, is I was curious about the variance in volume for each day of the week, so I ran the averages there. It's pretty consistent Monday through Thursday, with the averages falling anywhere between 65 and 69 million, and then Friday is a little bit lower, about 10%, at right around 59 million shares per day. Not too surprising that Fridays were lower volume, but I would have expected Mondays to be a little bit higher just to kind of make up for trading lost over the weekend, but doesn't appear to be the case, so as we're looking at volume, just wanted to help provide that context. Alright, moving into the Wedbush note, this seemed to capture the most headlines today. Wedbush raised their price targets on Tesla. Yes, targets plural. They have a base case and a bull case, so they've raised their base case price target from $500 per share up to $560, and their bull case from $800 per share before, now up to $1,000, the latter of which would be just shy of a $1 trillion valuation. Despite the increased price targets though, Wedbush has not upgraded their rating. They've maintained a neutral rating on the stock. As for the factors leading to the price target increase, Wedbush noted strong global EV demand. They see that rising to 10% of the auto market in 2025. They point to Tesla as the clear leader in electric vehicles, and they expect Tesla to benefit from sort of what they see as, I think, a tailwind or kind of a rising tide. I don't really think that's the best way to look at it personally, because I think Tesla is really the ones sort of out there creating this market, creating this demand. But I think as we've learned in our conversations with Piper Sandler analyst Alex Potter, that's kind of how analysts have to approach it. They need to, form this total addressable market, break that market down into chunks. They can't just say, Tesla's going to sell every vehicle that they can produce because the cars are awesome. Even if at the end of the day, that's kind of what it ends up boiling down to. Anyway, that's kind of the starting point. They go on to say, quote, "As we have witnessed front and center during this COVID backdrop, Musk & Co. have seen Teflon-like demand for its flagship Model 3s in Europe and China, while software-driven upgrades, FSD, etc., have gone right to the bottom line and enabled Tesla to get out of the red ink, coupled by cost cuts and tax credit boosts." End quote. I'll assume for that tax credit boost part, they're talking about regulatory credits, which I wouldn't really call a tax credit. It's more like an other automakers can't get their stuff together credit. But the first part of that is critically important, and I don't know, it doesn't seem like it's been talked about all that much this year, just how incredible the demand has been in a pandemic environment for Tesla to really be selling everything that they can possibly produce pretty much throughout the entire year. I've always been really confident in Tesla's long-term demand, but we have gone through periods of time, specifically like Q1 19, when Tesla was like, okay, we're closing stores. Just kidding, we're not closing stores. Oh, and by the way, suddenly, here is the availability for the standard range Model 3. Oh, and also Model S and X sales are down 50% quarter over quarter. Those circumstances are not quite as comforting from a demand perspective like what we've been through this year, where in the middle of a pretty terrible macro environment, Tesla has been able to not only sustain sales, but grow them, while also being able to, for the most part, maintain their gross margins and actually grow their operating margins and then become profitable this year. All of that would have been impressive enough without this macro environment. So I think the circumstances under which Tesla has been able to achieve some of these things is actually pretty important for the long-term outlook for those that are perhaps a little bit more skeptical of Tesla's ability to grow to, 1 million, 2 million, 5 million vehicles someday. Interestingly enough, despite Wedbush's relatively high price target, they are a bit skeptical of those goals themselves. They're modeling for only 710,000 vehicles delivered in 2021, That's only about 178,000 per quarter. That's actually below Tesla's stated production capacity from the Q3 earnings report. And it actually looks like Tesla has expanded beyond that production capacity, at least in Shanghai, already in Q4. So for this Q4, they're projecting 174,000 deliveries, again 710,000 for 2021, only 932,000 for 2022. And then brace yourselves here because I'm about to read the 2025 and the 2030 targets. It's 1.35 million for 2025 and 1.95 million for 2030. That's way less than half what Tesla is targeting for 2025, which is 4 million plus, and less than a tenth of what Tesla is targeting for 2030, which is somewhere around 20 million. And they still have a $560 price target on the stock. So I guess it's good that they've got a bull case. Unfortunately, from this note, it's not very detailed. I can't see exactly how that price target is shaping up, how much value would be for autonomy or things like that. Certainly, price targets are not just shaped on automotive delivery units, but still, I mean, 1.35 million for 2025, Tesla should have, pretty close to that production capacity at the end of next year. Wedbush does note that, quote, while Model 3s remain the core driver, going forward, new designs around Cybertruck and Model Y will further aid growth globally and thus enable Tesla to achieve its million delivery units, likely by 2023, 2022, not out of the question, in our opinion, end quote. I think just move that whole sentence up by about a year, and then it looks good. All right, next up here we have some news on the Model Y, specifically on the battery supply contract. This is per Tasmanian. They report, quote, Tesla has struck a deal with LG Chem to supply batteries for its Model Y, which will be manufactured at Giga Shanghai in China. According to a number of foreign publications, LG Chem is currently the only battery supplier for the future model, end quote. So I don't think this should be all that surprising. I believe Tesla currently works with LG to supply batteries for the non-lithium iron phosphate standard range Model 3. Those batteries, of course, being supplied by CATL. But I think this contract is of particular interest just because of the sort of positioning of the timing of the ramp up for the Model Y out of Shanghai. Obviously, we know the current Model Y out of Fremont is using the old 2170s. The new Model Y from Berlin and from Texas will use the 4680s. And then sort of oddly positioned between those two, you have the ramp up of the Shanghai-made Model Y. From the last earnings call, it does sound like the pilot production of the new cell at Fremont will be used for initial production at Giga Berlin. So at this point, I don't think we have any reason to believe the Shanghai-made Model Y would be anything other than a 2170 cell. But you would also think that they've got some sort of plan to convert over to a 4680 at some point, and I'm sure that's been a big part of these contract conversations. We also heard shortly after Battery Day that LG and others were working on their own larger cylindrical cell, presumably 4680s. So maybe what we end up seeing is the Model Y from Shanghai ends up being sort of the pilot production for LG 4680s, but that still leaves us with a couple of key questions, which again, these might be good for next earnings call, is what does that conversion process look like for both Fremont and for Shanghai as Tesla and other suppliers get the new form factor ramped up? Hopefully it's not too difficult of a process, but I would have to think there'd be at least some downtime or some cost to doing that as the battery becomes a structural component of the vehicle, which is not the case for the current setup. So presumably that's also true for the new Model Ys from Shanghai. So a lot of questions there. And again, I think this is one of the things that I don't know that people are necessarily underestimating, but it is a risk factor for 2021 and maybe heading into early 2022 that is definitely worth talking about more. Next up here is a story on a security flaw for the key fob entry system on Tesla vehicles that has been identified by a group of researchers at the University of Leuven in Belgium. The group identified that the Bluetooth interface on the key fob allowed for remote updates of the software, which they were then able to compromise and install their own update on to take control of the key fob, allowing them access and control of the vehicle. They write, quote, to summarize, we can steal a Tesla Model X vehicle by first approaching a victim key fob within about 5 meters to wake up the key fob. Afterwards, we can send our own software to the key fob in order to gain full control over it. This process takes about 1.5 minutes, but can be easily performed over a range of more than 30 meters. After compromising the key fob, we can obtain valid commands that will allow unlocking the target vehicle. After approaching the vehicle and unlocking it, we can access the diagnostic connector inside the vehicle. By connecting to the diagnostic connector, we can pair a modified key fob to the car. The newly paired key fob allows us to then start the car and drive off. By exploiting these two weaknesses in the Tesla Model X keyless entry system, we were thus able to steal the car in a few minutes, end quote. Of course, being a research group, they let Tesla know about this, and they write, quote, Tesla confirmed the vulnerabilities, awarded their findings with a bug bounty, and started working on security updates. As part of the 2020.48 over-the-air software update that is now being rolled out, a firmware update will be pushed to the key fob, end quote. So good for them for finding it, for letting Tesla know, good for Tesla fixing it, having the ability to update that over the air, that's obviously nice. And while I'm sure people would just prefer that this story didn't even happen in the first place, I do think, it does say something that it takes a group of PhD students working together to even find a way to get into a car and to steal it. And then obviously, once you do that, you have pretty limited options from stealing a Tesla. While I'm certainly no expert in that area, I would assume those limited options pretty much consist of parting the vehicle out pretty quickly. Last couple of things here to wrap up. The first is a story on GM that's super interesting. They've actually started to offer to buy out some of their dealerships that are classified as more EV-wary dealers. This is per an Automotive News report. According to that report, the vice president of Cadillac North America told them, quote, "We wanted to move fast and make sure dealers are ready for the acceleration. This is purely an option for those dealers who feel the EV journey is not suitable for them," end quote. Automotive News says that according to people familiar with the terms, those offers range from $300,000 to even more than $500,000 per dealer. Apparently, there are about 880 Cadillac dealers in the United States, and according to this report, they are all eligible for this buyout. Not all of them will take it, obviously. It's probably going to be, a relatively small percentage. But if they did all take it, 400,000, just midpointing there, times 880, that'd be $350 million for just the Cadillac brand to get out of the dealership network. And then, of course, if they were to do that, they'd need to set up their own infrastructure, adding further costs. Now, obviously, they could afford that, but it's not insignificant. And this is just the financial cost. There's obviously social cost or cultural cost for making a transition like that from a dealership model to a direct sales model. Think about the people, the time, the lawyers, all the legalese that's going into a process like this to even begin these negotiations, the strategy sessions, all the approvals that need to be signed. It's just an incredibly laborious and time-consuming thing that these legacy automakers are having to do just because their dealers don't want to sell electric vehicles because they don't see how they can make money on them. And again, not to overgeneralize, it's not going to be all of the dealers, but it just highlights how it's not just a matter of making an electric vehicle that's competitive with Tesla. You also have to get your entire organization and infrastructure. Then you get to things like the charging network, which you would think would be one of the easier things to do, and we're just not seeing any movement on that from other automakers. It is a precarious situation, to say the least. All right, lastly here is just a quick, little bit more positive note here for Ford. They've completed their EPA official testing for the Mustang Mach-E, and across the board, those final tests have come in right at what Ford was targeting. So the span of the ranges there, again, goes from 210 miles. It actually bumped up by 1 mile in that low end there. So 211 miles to 300 miles at the top end. Oftentimes, those range announcements can be misleading before we get the official numbers. A lot of that has to do with the conversion over from WLTP to EPA with European manufacturers. Obviously, Ford not in that circumstance, but still good to see them hit those targets there, although obviously I'm sure they would have taken an overperformance because I think the competitiveness of the Mustang Mach-E is lacking, but they do have the benefit still of the US federal tax credit, though again, we'll have to see how that evolves over the next couple of years. All right, that'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed. You can also sign up for notifications. Be sure to also follow me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Tuesday, November 24th episode of Tesla Daily. Thank you.